Biggest bank failures in U.S. history, and how Chase now owns them. How the largest and second largest U.S. bank failures in history are now operating as JPMorgan Chase, and they threw in Bear Stearns as a snack. They say history does not repeat, but it tends to rhyme. In December 2007, Washington Mutual Bank reorganized its home loan division, closing 160 of its 336 home loan offices and removing 2,600 positions in its home loan staff, a 22% reduction. In March 2008, on the same weekend that JPMorgan Chase chairman and CEO Jamie Dimon negotiated the takeover of Bear Stearns, he secretly dispatched members of his team to Seattle to meet with WaMu executives, urging them to consider a quick deal. However, WaMu rejected Chase's offer that valued WaMu at $8 a share, mostly in stock. By mid-September 2008, WaMu's share price had closed as low as $2. That's down from $30 in September 2007. The FDIC then sold most of WaMu Bank's assets, including the branch network, to JPMorgan Chase for $1.9 billion. In May of 2023, it happened again. First Republic is now JPMorgan. First Republic was founded in February 1985. Despite the 38-year history, it would not take long for the bank to implode. On March 19, S&P downgraded the bank's credit rating further into junk by 3 grades, saying that it may not solve the substantial business, liquidity, funding, and profitability challenges that we believe the bank is now likely facing. 29. On that day, the bank's capital shortfall was $13.5 billion, which the Wall Street Journal compared to the liquidity crisis of the Silicon Valley Bank, SVB, being a factor in its collapse. In its first quarterly earnings release since the crisis, the bank announced customers withdrew $104.5 billion in deposits during the turmoil. During the March 2023 United States bank failures, Fitch and S&P downgraded First Republic's credit rating, citing a high proportion of uninsured deposits from wealthy customers who are more likely to move their money elsewhere, and a loan-to-deposit ratio of 111%, meaning that it had lent out more money than it had in deposits from customers. To alleviate concerns of a possible bank run and support any withdrawals of deposits, on March 16, 2023, 11 American banks deposited $30 billion with First Republic. Despite the deposits, shares of the company declined. How many more banks do you will suffer as the Fed rate hikes become rooted in our economy? Comment below, and be sure to subscribe for more like this.